The U.S. Federal Reserve has decided to keep interest rates unchanged at its last policy meeting for the year. The central bank says it will be, quote, patient when it decides to raise them. Fed Chair Janet Yellen predicted that rates would be raised sometime next year, just not right now. CCTV's Ryntjes has more.
Federal Reserve Chair Janet Yellen is feeling pretty good about the U.S. economic recovery after 6 years of uncertainty. She's hinting that maybe the policy-setting Federal Open Market Committee will introduce a rate hike in the middle of next year.
A number of committee participants have indicated that in their view, conditions could be appropriate by the middle of next year. But there is no preset time, and there are a range of views as to when the appropriate conditions will likely fall in place.
She agrees that the slide in the oil price will also provide the equivalent of a tax cut to the American consumer and will help keep inflation low for the time being. Because inflation is low, the Fed can afford to maintain what it calls accommodative monetary policy, meaning the U.S. central bank can continue to encourage low borrowing costs.
Even as we begin to normalize the stance of monetary policy when that becomes appropriate, it's important to remember that monetary policy will still be very accommodative for a long time.
And following its latest two-day policy meeting, the Fed has introduced a new word, patience, into the regular statement it publishes, meaning when change eventually comes, it will be gradual and predictable. Ryntjes, CCTV, Washington.